Wall Street sees another rate hike over the next month from the Fed, but the Fed indicates that two more potential rises are on the horizon. It showed that in its forecast or its dot plot. Our next guest isn't so sure, writing that his base case is that a second soft hike will eventually be dropped. Joining us now is Evercore ISI Vice Chair Krishna Guha. Sort of what Wall Street is expecting too, Krishna. They're going to get away with one more in July, and that's it. Is that your expectation?
Look, I think what the Fed signaled was one hard hike and another soft hike, that if the data evolves in a favorable way, they'd be more than happy to drop down the line. It was a very interesting message from the last Fed meeting because they delivered that hawkish baseline of two hikes, but Powell's message in the press conference was that they'll be very careful. They're slowing down to find out more about the time-lagged effects of the monetary tightening they've already done, as well as what credit tightening, if any, is going to emerge in the period ahead. So my working hypothesis is that they're now moving at this every other meeting pace. The first one scheduled for July, very likely to happen. The second one, probably not. The one reason why I always bash the dots, and I know you have a good line about they get cheaper as they go farther, which is true. They have no way of knowing, is that we just have to see what the data shows us. If they're going to be data dependent, then why do they give us dots? Let's just see how much inflation moderates and what happens to unemployment, right? So fundamentally, on any sort of medium-term horizon, the data rules. We know what the Fed's trying to achieve. They are being wary right now as to how much progress is achieved and in train. They've been burned, obviously, over the last year plus by the strength and persistence of inflation. If the data turns in a more favorable way, believe you me, at the right moment, the Fed would be more than willing to capitulate to that dovish good news. It's just that they haven't seen yet enough to make them confident that inflation really is going to head back to 2, as opposed to moderate a bit more, but maybe get stuck in that 3.5% to 4% range. What I'd say about the dots themselves is that they're giving you a little bit of a sense of how they think the world is going to evolve. But more than providing, a private sector type forecast, they're really trying to illustrate the Fed's reaction function. That's to say that every time they have to upgrade that path for inflation, they're going to add some more hiking to convince everyone they are going to bend inflation back to target, whatever it takes.